Hey guys, want to do a quick video. Obviously, the news and everything in the market is going crazy right now, and institutional levels lost support, so I quickly had to get out. I do think that this brings up opportunity very, very soon. So we are way off. We're quite oversold at this point. So I think there's going to be really good opportunity ahead. I know it is not fun. I know account values stink right now, but hang in there. What we're seeing in sentiment, meaning the fear, it's right at levels that I really want to see when I'm like, yes, people are panicking in the street. But right now, on a day like this, you just wait until you see buyers, and we have not seen buyers. We were down today 0.43%. So yesterday I saw that there's an issue. People are selling like crazy. I reduced to 25% in case we would bounce, and I sold again today. And I'd never like to be in cash, but there are times that I will show you that where it just makes sense. So overall, here's the performance of the week. You can see that early on in the week, it looked like we were turning around, and I'll show you this in the chart. This is not an easy week. I had really good entries at 43.90, 44.78, and 44.93, all of which were positive at one time, and I quickly had to protect capital by the end of the week. I mean, look at Thursday, Friday. So overall, we're still beating the index, which, again, I never like to see losses. I hate that. But we are beating the benchmark. And so if the benchmark averages 10, 12, 14% a year, depending on dividends, that's difficult to do. And I understand before implementing this strategy, people that have been with me for quite some time, it has not been a good 3-4 years. I get it. I'm being realistic about that. But this strategy is working quite well. And you're like, we're down 5.75%. I get it. We were beating it by 10% 3 weeks ago. That's how difficult this market is. Okay. But overall, if we are staying near that, we will be okay. And I need to protect at times like this, but do not lose hope. And there's quite a few things that I want to show you that I think will make a little more sense as to what I'm seeing. Number one, we lost a lot of key levels this week. Okay. Resistance above 42.78, basically right around here. We went below that. We lost the trend line. So this is how difficult it's been, okay? We finally break the downtrend line right here, and I got in at 44.92 way down here on this day. So it was a great entry, did quite well. This looks like this was going to break out. We would have broke. At the time, the 50-day moving average was trending up. The 200-day moving average was trending up. And we got to 45.12. And just above, we gapped up, which is not usually what you want to see. And we just cratered. It wasn't necessarily anything in the news. Sure, you could say it was Powell, Fed Chair Powell being a little more hawkish, but it's a tough environment when interest rates are rising. That's just the reality. Growth gets hit. So we got to be careful of that. But this is exactly what I wanted to see. I mean, I'm thinking this is an inverse head and shoulders right here. You know, consolidation for 7-8 days. That's great. That's usually really good. But we lost this level and just people sold like crazy. And as you can see across the globe, it was not better. And that was my main reason where I'm like, hey, this is a protect time, and it's selling off even more after hours. So I'm in cash and I'm glad to be, but we will be buying very soon, slowly, because if we held at these levels for the rest of the year, I think we'd be perfectly fine and do well. So support 42.55. We are right there now, actually. Yeah, really close to there. So this is a huge level that has held consistently this entire year. So I think we're really, really close. It'll probably go. I'm hoping we get the 3 red candles, one more. If we open red, that would be a fantastic thing. A lot of times during these checkbacks, you get 1, 2, 3 bounce, and you see what happens from there. But man, has this been tricky. We had an uptrending 5-day moving average, which is my key and strategy to say, if we have an uptrending 5-day moving average, which we did, to press hard. And I did. I went from heavily invested to 0 invested in 2 days. Living proof that you can have no bias. You don't have to. So when people ask me, do you think we'll have a recession? I don't have a crystal ball. The good news is this, and I will say this, is the market is very, very bearish. And when the market is this bearish, usually you get a decent bounce, even if the news is getting worse. And usually the biggest rallies occur during downtrends. Just remember that. So you can argue size and sample is small, the group doesn't change. That really doesn't matter. It just basically says, where did the bulls go? This is investor sentiment. Percent bullish, less than 20% of active managers are bullish, are bullish. That's usually very, very bullish for stocks. 3 months, okay. 6 months, 12 months. So when we're seeing this amount of fear, and another fear gauge is, that's a big increase in volatility right there. Doesn't mean it's over, but a lot of people really like to start buying in the 29-30 range, and I would not expect anything different. Obviously, I'm going to watch price action, watch key levels, but it'll be very, very interesting to see how this plays out. But again, it's never fun to add during these times. But this is what I have been wanting. I did not think that this was going to hold, even though I should have, based on rules right here, been pressing. That's my fault. But we have been really trying through here and doing pretty well, and I had to protect capital. So overall, we're still beating the index, which is good. I never like to see this. And again, the people that have been with me for quite some time, I know I need to do better, but the strategy is working. So previous performance, I get it. Horrendous. That's something that I'm working on. If you can't handle that anymore, I respect that. But I do think we are very, very close to some key levels here that have some really nice support. Right now, we are at this key support. If we break there, it would not be good, but I would get some great long-term buys. I mean, when you're seeing this, some of these names like Apple down significantly, like 2 points, these are big declines, and even after hours, even worse. 4.22 in Google. Tesla's hanging in there because of a decent report, but this is not good. You don't want to see semiconductors down that much. Growth is getting hit because yields and just the chaos overseas. There will come a time, I say it over and over again, that there's going to come a point where the price is so low where bad news will continue and everybody's going to buy. Because right now, many people are short, and I can show this to you. Okay? The put-call ratio as of yesterday, was 72, one of the highest levels, meaning people are hedging and very bearish the market. If people start buying, these people are in trouble, and that's when you get your biggest rallies. So objectively, this is not good to see a decline in active managers reducing the amount of holdings, their percentage holdings. It's not good to see the number of new lows stay this red. It's not been pretty since December, and I've been talking about that. Is under the hood, it's not pretty. I mean, you're seeing some names just get obliterated. The crowd favorites of 2020 are down, some of them 70, 80%. Living proof, you can't just buy a stock and expect to buy every dip. A lot of people just buy dips blindly. For example, we'll even show you one. Like, some people just love BABA, but it's a China stock. This thing is getting killed. I mean, it was 185 in November, and now it's 85. It was much higher than that if I go farther back. So again, it's nobody's buying it. Number one, it's in China. Number two, it's not in trend. It's below the 200-day, the 50-day, and all trends. You stay out of it until buying comes in. And you might get a pop, but this is just living proof you cannot just buy blindly these companies. Penn National, a gambling company, which everybody wanted me to buy at one time, in a few months, just getting obliterated. That from 80 to 35, and if you go back longer, it's even worse. Here's the kicker that many of you don't understand, that I think is the real issue. Some bond funds, again, bonds, think conservative, right? That's what the industry tells you. If you're trying to preserve capital, be in bonds, right? So here's the problem. Some of these areas are down 23%, much worse than equities. So this is what I'm telling my clients. They're like, hey, how do we preserve capital? If you're trying to keep up with inflation, you have to be in equities. And a lot of these bond funds are going to have some serious issues because when interest rates rise, the value of their bond goes down. So because nobody wants to own an increasing yield. If it's going to increase, people want to keep buying it when it goes higher, right? So the value of your bond goes down. It doesn't mean bonds are bad. It's just a tough environment for bonds. And when you have bonds down 23% in a few months, how is that a preserved capital situation? So I'm just explaining that to you where people are like, man, it should be easier than this. It's not. Bonds are down much more than a lot of growth stocks. It's unreal. So it's a tough environment. We got to be real about that. Eventually it'll get bought hard, but I want to just kind of show you this is not easy under the hood. I think we're going to be completely fine. And I feel good that, number one, the strategy is working. Again, long term, it has not been pretty, but short term, using this strategy has been great. Before, I was basically holding 30 stocks and it just was not working, period. Admittedly, it just did not work. Growth is getting slammed, but strategy is currently working. Still have some training of the brain to do when this crosses. No matter the news was horrible this entire time, and we rallied. This is a 10% rally. Okay, so got to be objective. If this starts to trend up, we are way below the 5-day moving average. So eventually, we're going to get a pop, even if the news is worse. Okay, so I do like that this is becoming much lower. It's almost oversold midterm. So view this as an opportunity. If you're like, hey, I don't have much time till I retire, this is actually not a bad timing thing. This could be a very good thing, especially if you look at history and say, when people are this bearish, good things can happen. So hang in there, guys. I know this is not fun, but I'm actually optimistic. I'm glad I followed rules on the downside, which has never been a problem. It's been on the upside that I need to continue to remain disciplined. So again, you live, you learn. I'm trying to improve just like everybody. And this strategy is working. Once this downtrend broke, it looked like it was going to just explode higher. We tested the 200-day moving average and boom, down. The 200-day moving average is this red line. Down. I thought this was going to hold. It did not. It just kept selling. And hopefully this holds. Otherwise, here's your next support. So have a good weekend. Get outside. Enjoy yourself. We will be fine. Right now we're in cash, but don't expect to be there long because everybody's going to freak out over the weekend because they see what the stock market is doing after hours, and that everybody's going to talk about it, get super bearish. Expect to hear it in the news. That's all you're going to hear. That's usually when you get your turnaround. So hang in there, guys. Again, I'm going to follow price action. If price action starts to get remotely decent, buyers come in, I'll press hard, but we have seen zero buying, like very small bounces, and we have to be real about that. So always good to be realistic. I feel like I am being pretty non-biased. I wish yesterday I would have sold a little bit earlier, but overall, again, nobody has a crystal ball. So I'm ignoring all news and saying, what is price doing? Once we got below here, I got it out at 44.95. Or excuse me, 43.95 75% and a little bit lower here today in case it were to bounce. I was hoping it would bounce at this 43.50. It did not. So you have to respect it, get out. Buyers were not coming in, institutions were not coming in. Just be careful during these situations and have the capital to reload, have zero bias. If buyers come in Monday, boom, we go. You cannot have a bias here. So hang in there, guys. Appreciate your trust. I know this is not fun. This is not easy for me either. We will get through this. Thanks, guys. Have a great weekend.